wallet project structure on the first generation blockchain and cryptocurrencies. As a result of the interest from Latin family offices for cryptocurrency, Eduardo launched the Trident project. TridentX project is developing the first institutional-grade tokenized securities platform or marketplace in Canada for the primary issuance and secondary trading of financial instruments. Eduardo is a dual citizen of Canada and Mexico. He lives in Western Canada with his family and son. He holds a Bachelor of Business Administration from Universidad Iberoamericana. He's a certified Corda blockchain developer and Ethereum expert, and is a candidate for the Chartered Investment Manager designation. Without further ado, let's give the warmest welcome to Eduardo, not without mentioning that in the 10 last minutes we will have a Q&A round session. Please send all your questions into the Zoom chat. And welcome, Eduardo, and the stage is yours. Thank you so much for being here.
Thank you very much, David, and the Faculty of Business.
Sorry, if you don't mind, I am recording this event, right? So thank you so much.
Excellent. Well, thank you for having me, David. It's a pleasure to share some of our experience with these class in the Tecnologico Monterrey, in the campus Monterrey, where we have many friends, and we once had the plan to open an office in San Pedro. So today's presentation that we're gonna have is gonna be a very casual presentation. We like to keep it casual. We like to obviously also have it interactive, and we would love to perhaps, post a first question, if you will. Maybe someone can help me to keep track of the answers. So by a show of hands with your tool, I'd like to ask, how many of you have both opened a wallet and have participated in crypto? So maybe that's two questions, but can we have the first one? Could you maybe keep track of that so that we can maybe have some of this information at the end of the event? And also what I like to do is then share my screen. Please let me know once you see it so that we can start the presentation.
You can see it now.
My screen?
Yes, I can see it.
Yes.
Excellent. Okay. Well, so today we're going to talk about capital markets and financial innovation, and as per your indication, your class is getting some information, and this will be very general information that we want to share on what has happened, what is this technology that has taken the world by storm. Our lawyers decided that we should have at least 2 pages of information here, so that you know that we're not soliciting your business, and that we are obviously in compliance because we are, as you mentioned, getting our license in Canada and very soon in the US, so that we can help projects to finance their different ventures. So the agenda basically seeks to answer a number of questions. What is blockchain? What are the cryptocurrencies? What triggered the Bitcoin inception? What are the drivers of crypto and digital transformation, and the applications of cryptography in finance? Then we'll talk a little bit about our project so that you see what we do, and then we'll have the Q&A questions. So without further ado, is there any questions or comments? Can we just move ahead? Okay. So before we move into the blockchain, one of the things that we want to basically exemplify is what is and what moment are we on today. So a lot of people are obviously arguing whether blockchain and digital technologies will have a huge impact, and what is the most relevant comparative time in history where we can actually see what happened and what is the opportunity. So what we've done is we have gone back pretty much 100 years, 125 years, to look at the period when the US and the Industrial Revolution was happening. So during that time, in the period of 1775 and 1800, the foundations for the Industrial Revolution, or the Industrial Revolution in the US, were laid out. And as we can see here in this graph, we had a change in the GDP per capita between that time and 2018. So during the Industrial Revolution and in this area, we had a number of infrastructure events that clearly facilitated the second industrial revolution. What were these events? Well, the big banks in the U.S., including J.P. Morgan, were buying land, and they were laying out the infrastructure that we come to know today as trains and rail tracks. So that opened up another avenue, which is the telegraph, and which I may add is the first real application of value transfer, and enabled the first value transfer by Mr. Cornell, who actually has a university after his name, that was the owner of a number of the telegraph stations across the US, and they enabled the ability to telegraph money from one side of the country to another. That was basically the first fintech solution there was. It's a financial technology solution. But as we can see here, we basically laid out the opportunity for an increase in wealth. And by multiples and leaps and bounds, we had then the second industrial revolution. Clearly, we had the war, but after that, we had the period that we know as the baby boom revolution. And through that period, we had the time where the space war, the space race, basically during the Cold War, creating the technology that we know today that was facilitated by telecommunication revolution of the satellites. We had the Sputnik, we had all these technology that we use and come to use every day that we have in our pocket, that is allowed the ability to have what is called a distributed network, which is basically what you have in your phone. And as you see, basically, if you think that this is going to be an important point in time and how we move from the industrial revolution to the technological revolution today, then we can see here the period of time from 1990 to 2025, where we've seen some of the technologies that happened that have enabled what is going to happen in the next decades. And we see a very promising future. So we need to embrace the future. We need to actually have that in our mind. So then, what are the cryptocurrencies and how do they happen? What is blockchain? Blockchain is basically a system of ledgers that are distributed on the cloud, as we call it, or decentralized computers that work on the internet. And this technology enables to have copies that are protected by cryptography, which is basically a computer program that allows you to solve this cryptogram or a hash function, which will render those who have the public keys and the private keys to match them to have access to that specific ledger. This is basically an accounting principle. And as you know, you have debits and credits. And this principle of debits and credits, which was invented to facilitate trade and actually keep track of ownership, has come to the forefront today, to the point where in the time of 2007 and 8, we had someone by the name of Satoshi Nakamoto. We don't know if it's a person or a group of people that was very concerned about the actual bailout of the banks. In fact, in the first block of Bitcoin, there's an inscription that says, "Here is the chairman of the Fed, ready to bail out for second time the banks." And the concern that was actually laid out in that piece of technology is the fact that we are creating a lot of money, fiat money, that really does not have any real value, because we are just extending credit upon credit. And so Bitcoin was actually born out of that inception point. And as you can see, well, one of the key components of that was that you had anonymity. And that's a misconception, because a ledger actually tracks everything. And in fact, we have seen some instances recently where they can actually track whoever it is through the blockchain. But this was a phenomenon that took this technology, the first application for global decentralized technology, and basically created the phenomenon that we know today as cryptocurrencies. In fact, during the space of 2016 to 2017, the actual cryptocurrency ballooned and created a lot of wealth. In fact, myself was invited to participate in Bitcoin as per the bio that David was reading. I started exposure on Bitcoin at 5 cents. Now, I didn't keep all that Bitcoin, and sometimes I wonder, why did I not keep the Bitcoin? Because I will be able to retire in a very large boat in the Mediterranean today. However, what's interesting is that we saw the whole progression, and basically we saw that this would revolutionize the opportunity to create new technologies such as capital markets as financial instruments. The second instrument that is generation 2 is the Ripple token. Now, the Ripple token that you guys know today is basically a fork, as we call it, of the SWIFT. The SWIFT is the code that banks use to send money from one location to another. In fact, the two largest banks in the planet that used to have a monopoly in transfer money, and they still have a large chunk of them, is basically Citigroup in New York and HSBC in London. I actually did work with the HSBC, and I worked with the SWIFT platform. And when you see what is the impact of being able to transfer money for cheap between two locations, then you start to understand the magnitude and the opportunity that there is. So today, and I forgot to mention these, but Bitcoin has 50% of the market capitalization, short of $1 trillion. And we can see that Ripple has a 2.5% of the market at $56 billion. Now, the third generation, as we call it, and the most fundamental change in the blockchain technology is the Ethereum. And why is that? Because the key concept behind the new ability to have smart money is to actually create a code that automates a number of issues. Today, in fact, you can automate everything. We have applications that we were sharing with David where we can actually automate, for instance, a green bond. We can automate the corporate finance. We can automate the payments. We can automate compliance. We can automate reporting. In fact, there's nothing today that we can't automate. And that is basically a function of that specific ability by the third generation that allow you to create what is called a smart contract. There's nothing smart about it, just like there's nothing intelligent about artificial intelligence. It's basically an algorithm that you create, and it basically allows you to create a routine. Now, a few weeks ago, we had the event with the Masters in Finance in Mexico, and I'm going to steal the story from Greg LeBlanc, who was telling us that the first and most simple application of a smart contract is basically a vending machine. So you grab, let's say that you're in Mexico or the US, and you grab your pesos or your dollars, and you want to get a candy. So you walk down the aisle into where you have the vending machine, and the actual smart contract is very simple. You don't need an intermediary. You have some money, either in your bill or in an actual token. You put it in this slot, and then you select the item that you require. If you meet the conditions that the money is in there and there is an actual item inside, the actual smart contract will give you the good. And so that is one of the applications that we have. Okay, so what are the drivers for the crypto market? Well, as we see today, and we'll show you a graph in a couple of minutes. This is courtesy of Dr. Luis Hernandez, by the way, who's here with us in Vancouver for the launch of the project. We can see that the digital economy has actually crossed that point where over 51% of the GDP of the US is actually tied to technology public companies or companies that are listed in the stock market after COVID. And that is because everyone is at home, just like today I am presenting to you remotely. The fiat erosion, which is basically the point that was the inception point for Bitcoin, is another factor. Now I'll show you a graph of that so that you have an idea of how much money is today owed by the US. But let's put it this way. Over the last 12 months, the US has printed over 50% of the US dollars in circulation. So that should give you an idea of how much the erosion of the money and the losing of the value has happened over the last little while. Then there's a convergence. We have a number of technologies that are coming through. You have telephone companies that are buying banks, banks that are buying telecom companies. You have pipeline companies that are becoming telecom companies. So this phenomenon of convergence is actually one of the main drivers for the actual cryptos, where you see a lot of different companies that used to be in different industries and sectors, and now they're actually crossing the chasm. And one of the last ones, which is ESG, or as we call it, decarbonization. So as you know, the UN has outlined a framework that says that by 2050, we should be able, most of the companies and countries should be committed to what is called the net zero. That means that we should be able to neutralize the greenhouse emissions. And the only way that we're going to be able to do that is basically through automation in the decentralized ledger capital markets. So as I mentioned before, you can see here we have crossed the Rubicon. The last time that we were at the same place in debt to GDP in the US, and we call the US the big elephant where we sleep in the room, because we have Canada on one side and Mexico on the other side. And so we're in the same bed with this elephant. The last time we were at the same place as we are today was after World War II. And you can see here that today we're crossing that Rubicon. So eventually the question is, what can we do and why is this happening? Again, we have this decarbonization, which is the commitment that we have to invest about $6 trillion if we started in 2035 every year, so that we can actually meet that target of zero emissions by 2050. Keep this in mind, because that's a very important point. Now, every company needs to know this because of regulation. So what's happening with Bitcoin? Well, a lot of people use Bitcoin as a proxy, as we call it in financial markets. So Bitcoin, by being 50% of the market, basically is an indication where the market is going. So it took about 10 years for Bitcoin to cross the 10%. And here is the normal S-curve, or the adoption curve of technologies. Now, when we compare it to the technologies between 1904 to 2019, where we see the tablet right here that went basically to the moon, then we can actually start to see what are the tendencies. Now, before the COVID, the acceleration was already very, very clear. We had actually crossed what we call the hockey stick point, where the actual greater value is coming. We think that consolidation plus regulation is a key component to keep in mind, because as portfolio managers, we can't really tell you what is going to be the price of Bitcoin tomorrow, just like we cannot tell you what is going to be the price of oil or anything today in a couple of hours. There's a number of curveballs that can happen. However, we can understand fundamentals. And what we understand is that Bitcoin has a fundamental value, that is the cryptography and the value of the goods traded inside of it. Now, the other thing that we know is that it's actually an illicit good. And if we want to compare Bitcoin with anything, we need to compare it with, for instance, illicit drugs. So just because you make something not legal, it's not going to crash the price. In fact, you create that monetary incentive or the black market premium that can create an acceleration. And that's what we've seen recently. Now, why do millennials prefer crypto? That's a good question, right? We like to ask that. Well, again, we're looking at the debt of the US. And this is an actual depiction, a graphic depiction for those who have traveled to Mexico, to Teotihuacan. Now, so that you know, this is the Giza pyramid. But if you know about pyramids, you should know that the geometry is different between Giza and the Pyramid of the Sun. However, the volume is the same, approximately. So if you were standing beside the pyramid and you had a pallet with $100 bills, as we call them, the Benjamins, stacked behind you, this would be the size of $15 trillion. Okay? Now, the US took 80 years to accumulate these, including the Second World War and every other conflict, including the Gulf Wars. And that is a lot of money. And I want you to keep an eye on these dates, 2011 and 15 trillion. And why do I say that? Because over the last 10 years, this pyramid has multiplied by 3. So today, the US debt is $45 trillion, okay, in less than 10 years. Now, a lot of people are thinking, oh, modern monetary theory says that I can print to oblivion. Well, I beg to differ. There's a point where things start to get tricky, and we are seeing that with inflation. But just think about this. Back in 2011, the US had to pay 30 cents in interest for every dollar that it collected under Treasury. Today, the pyramid has tilted upside down. They have to pay 63 cents for every dollar that they collect. So some people say that is not sustainable. I don't know. So what happened with the digital tsunami, as we call it, the Masters in Finance programs that we're collaborating? Well, we see here a tectonic shift that happened. And the closest resemblance that we see that is basically a photonic jump. If you see an actual atom, we have atoms in their orbits. And sometimes when you inject energy, they jump to another orbit. So this is what's happened. The timeline compressed. So we were here, and all of a sudden, we moved forward. And what happened? Well, look at these. In, again, 2011 and 15%. It's an interesting coincidence, but think about this. In 2011, Mr. Mark Andreessen, and for those who are not Gen Xers like myself, Mark Andreessen was the inventor of Netscape. Netscape was one of the most prevalent and probably the top 3 web browsers in its time. He invented that. He is the principal of Andreessen Horowitz, the most important VC fund in Silicon Valley. And he announced back in 2011 that software is eating the planet. Well, look at that. What a coincidence. During the same time as the pyramid, we have actually crossed now 51%, as we say. So what is the impact and what's happening? And more importantly, for us that are in finance, what are the implications? Well, a lot of the banks have already taken notice, and in fact, they have been quietly changing their ways. If you see here, the report from Bloomberg indicates that JP Morgan, Bank of America, and Citigroup, just those 3 banks, have committed over $10 billion for the digital transformation. Now, I want to make sure that you understand this. This doesn't mean that they're buying blockchain, they're not buying Bitcoin. What they're doing is they're actually creating the new infrastructure that will allow them to be competitive under another scenario that is called the reversal to the mean in the compression piece. Now, I know that David, you're with Citigroup, so I'm not gonna pick on you, but this is happening at your place of work. Now, what is the implication of this? And how does this impact us? So how does this is gonna be connected with crypto? Well, we know, and this graph was shared with me by the principal director of innovation at a company in the US that's called Duke Energy. It's one of the largest utilities. And when they met with me in Las Vegas, when I was a speaker, they actually revealed to me something that opens your eyes. I asked the guy, so why does a member of the Fortune 100 care to know about blockchain? Why would you want to tokenize your treasury? Why would you want to tokenize your financial instruments? And him, being a millennial like most of you, said to me, well, we know that millennials would prefer to take $1,000 and put it in Bitcoin over gold, real estate, stocks, and government bonds. And I said, wow, okay. And our company is a very capital intensive company. What does that mean? That we have a lot of bonds that we need to recycle, we need to refinance. And because we need to amortize that over a long period of time, as you do with a bond, then the implication is that if I don't have something that smells like crypto, looks like crypto, and behaves like crypto, when the millennial generation takes the helm of the economy, and we know that they will receive this money, which is about $10 trillion, or 2/3 of these $15 trillion that they will receive from the baby boomers, then we won't be able to actually finance our company. And then that's when your eyes pop up and you say, well, you know what? I think that's a very good case. So you're actually looking for a way to continue your operations. And this is happening today. This is not happening tomorrow. This conversation that I'm sharing with you happened 4 years ago. So today, basically, there's a number of institutionals that you might see. That's the Australia Stock Exchange. There is the employer of your professor, the Deutsche Börse, which actually owns now the Bolsa in Madrid, Fidelity, Goldman Sachs, Hong Kong Exchange, the London Exchange, another small company called JP Morgan, and Societe Generale. All of them have been doing these, and they have been playing these quietly. All of them have said nothing to most people. And as we know, as a banker, I can tell you, the one thing that banks like to do is keep things quiet. Very cryptic, which is interesting, talking about crypto. Okay, so now I'm going to talk to you about our project. So what is our project? Our project basically is an arbitrage opportunity. It's an arbitrage, we call it infrastructure, digital infrastructure. Okay, so talking about what the banks are doing. If you look at where the big banks are putting their money, you'll see that they have committed their capital not to buying crypto, not to buying Bitcoin. By the way, I'm not suggesting that you buy any crypto, nor I think that you should not buy it, but you should be very careful because it's a very volatile asset class. So don't invest what you cannot lose. Okay, saying that, and going back to our project, our mission is to basically build a bridge between old finance and the future, as we call it, decentralized finance. And why do we want to build this? Well, because one of the fundamental challenges that we see today is that even before COVID, but more importantly after COVID, a lot of the SMEs, a lot of the innovators, and a lot of the entrepreneurs that have great ideas have a very hard time accessing capital. So what we want to do is we want to democratize access to capital. And basically the vision that we have is that we want to help everyone that, regardless of race, creed, color, or whatever, that has a good idea so that they can get finance, so that we can have a more sustainable and democratic distribution of the actual wealth, because that's another problem that we have. Okay, so what is it that we are? What is our platform? Well, TridentX is basically a gateway. It's a trusted gateway. And that is the key word that is used by Citigroup and HSBC. In fact, SWIFT is basically the key for the trusted gateway to banking. So we do operate decentralized ledger technology. However, what we use is what is called enterprise purpose built decentralized ledger technology. And it's very different because most of the projects that you see today, all the cryptos and all these other places use what is called public infrastructure. And what is the problem with public infrastructure? Well, there's no problem, but my son that is 11 is doing crypto mining, and I love my son dearly, but if I'm going to make $100 million bond, I want to make sure that no one is actually having a glass of chocolate milk on the top of the computer that is mining my bond. I'd rather have someone that is in an office doing it for me. Now, the technology that we have and the partners are these guys here. Now, you recognize these guys because everyone uses IBM in every company, but you might not recognize Digital Assets or R3. Now, these two are our core partners today. They actually have been building the infrastructure for a lot of the decentralized ledger locations around the world, including the NASDAQ. And they actually announced something that we knew very much along last year, is that the NASDAQ is going to be using this technology to have a marketplace just like the one that we have, obviously in a bigger scale. And what is important is that our core partners use very secure private infrastructure. That means this is the technology that the U.S. Department of Defense uses. This is what your bank uses. And so that makes us unique and different. Now, what is the size of the market? A lot of people will say, well, what is the opportunity here? Well, there's $1 quadrillion today. Now, we know that that's not going to happen overnight. However, people like the CEO of the NASDAQ said a few years ago that 100% of the stocks and bonds will be tokenized within 5 years. Maybe he was too ambitious, but this is happening nonetheless. Today it's happening. Okay? So, again, who is already in this game? And what is the challenges? What are the challenges that we solve? So we've done an extensive analysis. We have actually talked to issuers, companies that want to have a stock or a bond so that they can finance a project. We have talked to asset managers. In fact, recently we got a mandate that is a huge mandate for one of the biggest names in oil and gas in the US. We have talked to other players and intermediaries. And the common denominator is that today we have basically gotten to, we talked about generation 1, generation 2, generation 3. Today we're talking about next generation, as we call it. The next generation of blockchains are not unique to one specific architecture. Our technology is actually an agnostic architecture. So what is the challenge between these technologies? Well, all of them don't talk to each other. There's no interoperability. So it's very difficult if you create a bond, let's say on Ethereum, to talk to a bank because the bank is using Corda. If you're a supply chain and you're Maersk and you want to finance something and you're using IBM, how do you talk to Corda and how do you talk to the other guys? You can't. So what we're creating today is 3 basic elements that are crucial to actually having an integration of the market. The first one, we're creating the on-ramps and off-ramps to crypto. The second one is we are using enterprise technology. And the best analogy I can tell you that we can reference is a lot of people specifically use private highways. And in Mexico, there's many of them. And I know you're in Monterrey, so you might not be familiar with the Autopista del Sol. But, a lot of people have gone to Acapulco from Mexico. And so the question is, if you were traveling from Mexico to Acapulco to, let's say, a friend's vacation, and assuming you're not taking a jet, would you rather take the public road that will take you there in about 8 hours and where you might get mugged and you might have an accident and no one can help you? Or do you rather pay a little bit of money and have Autopista del Sol, where you are in a very comfortable, safe, and very fast highway that can take you there, where you have all the facilities, you have security, and if something happens, someone gets you? I guess the answer is very clear. You will probably want to take the enterprise infrastructure. That's what we're doing. And so that basically opens the world to what we call global scalability. Why? Because we're using standards. Our team, including myself as a portfolio manager, Dr. Hernandez, who's actually formerly employed by Citigroup, and the rest of our team, we're all financial professionals. Our technology guys, they're all from Microsoft, and you'll see who they are in a minute. So the question is, do you want to deal with amateurs or do you want to deal with professionals? And I think that if you're doing business, you want to deal with professionals. How are we doing for time, Mr. Sebastian?
We're okay. It's 6:40, so we have like 10 minutes more.
Okay,
so we are.
So I'm gonna accelerate here. So, but what do we do? What we are is basically an institutional liquidity solution. What we have today is a very interesting point in time, where a lot of the institutionals hold between 20 and 60% on non-liquid assets. What is a non-liquid asset? An alternative asset. What is that? It's a building. Maybe you own a bridge. Maybe you own a manufacturing facility, or any of above. So if that is actually not operating at its top capacity and there is challenges for credit and you're not able to collect, you're gonna have some problems, because eventually what you're gonna get is what is called the liquidity crunch. Now, with all the actual credit that has been pumped to the markets and yields in the US at zero today, the question is, how much longer can you continue to keep your asset if you have no cash flow or you are impaired? And the answer is not very long. So what we create is liquidity, okay? The biggest example on one of the analysis that we did was actually completed in, as you can see here, November 20th. And we said, okay, so we know that digital assets are basically part of the alternative asset class. It's basically now earned its place there. We know that it's $10 trillion. And it's growing really, really fast, and it's going to probably be $20 trillion by 2025, according to Preqin. We also know that institutionals, as I mentioned, own between 20 and 40%. So we said, okay, so what could be the potential value of crypto? Back then, the value of crypto was $500 billion. So we said, well, the minimum threshold that we see is $2 trillion. And if any of you have been doing any trading in crypto, you know that that has been crossed a couple of times. In fact, today we're just shy of $2 trillion. So what is the potential future? Well, it's unlimited. So what is the client base? Who are we selling and what are we doing? The first client are the issuers. Who are they? New companies, SMEs, small and medium enterprises, or pymes, as we call it in Mexico, that have no access to capital. Why? Because they don't qualify. They will not be able to list in the Bolsa. They will not be able to list in Canada. They will not be able to list anywhere. What are their options? Angels, venture capital, very expensive capital, maybe crowdfunding. I don't know, but it's not liquid, okay? And then there's corporates. We have a number of companies that have come to us to look at solutions for the green bonds. They're basically looking at ESG criteria, which is one of the big drivers. But those are the two types of clients. Now, who are the investors? Well, the first class of investor would be you, the millennial, the digital native retail client. A lot of you guys are using an application in your phone to actually do something with home broker. In the US is basically Robinhood. You will be a client, okay? Who is the second type of client? Institutional investors. Many of them might want to have an exposure to a new asset class, but they don't want to be taking the full hit. They can have a concentration as an asset. So basically, they would want to take a small chunk. And finally, fintechs. Our technology allows us to do what is called banking as a service. So in Mexico, for instance, we know there's recently about 46 fintechs that received the license. Now, they might be able to do a lot of things, but they cannot do everything. And because Canada is the first regulatory framework in the world that allows you to do what we do, and we have the first institutional license, it's very easy for us to see how many of these fintechs across Latin America that we're tracking, about 3,000 of them, might be needing eventually a license so that they can operate. Who is our team? Well, you've seen me. Luis Hernandez, you recognize him. You know, he's the director of the specialty in energy administration at EGADE. Diane Sauber, a CFA, she's a very well-established practitioner in Calgary, in Alberta, in oil and gas. Mr. Alberto Escobedo, he was formerly one of the directors of security at Microsoft. Jonathan Brathwaite, and we have a very long team of all the members that we're now showing you right here. Now, what is the opportunity? Well, look at this. This is basically, as we call it, DeFi, the bridge to the unique O'Reilly. And basically now talking about our licensing. The license in Canada is a unique opportunity, and why we actually make emphasis to that and what we want to let you know about this. Well, because in the US, the Securities Exchange Commission is now looking at how to regulate this. However, the Canadians have already had put together a framework, and that's why we are actually in the process to obtain a license in 60 days. And what we're using is a very well-established tradition of Canadian capital markets financing a lot of projects in Latin America that today actually have a market capitalization of $50 billion. In fact, myself, when I was working for the banks, I was financing a lot of companies that you might be familiar, including Pacific Rubiales, that was actually a target of an acquisition by our friends of Grupo Alfa. So we have a tradition in Canada. We have done this. We have actually financed a lot of mining in Mexico and Latin America, a lot of the oil and gas in Colombia, a lot of the oil and gas in Peru, and we have a solution. There is a strong disclosure and a key component here. The US and Canada have what is called an integrated capital markets. What does that mean? Basically, when we get a license in Canada, we'll be able to cross into the US and get the very same license. So that will open up an opportunity, much like it happened with the cannabis. And I'm not suggesting that you should consume or buy cannabis stocks, but the cannabis market was actually started in Canada, where a lot of these stocks and companies were listed in Canada, even though they were financed by the US. So right now, we have a very unique opportunity, and anyone that is interested in this should be looking at the opportunity to do business through Canada. So we have a license, we have a methodology, and we are securities compliant. Therefore, we are really a security token platform, and we can do anything. Eventually, we might talk to your class about some of the applications and green bonds that we presented last week with EGADE. And this puts us in a position of power because we will have pretty much every license that is required to run a full ecosystem. Here is our players. This is our technology ecosystem. Digital assets as the base layer, the three enterprise layers, Consensus Quorum, R3 Corda, which is all the banks, IBM, Hyperledger, Stellar Lumens, where we have an opportunity to be the anchor in Canada, Ripple, and Swift. So, how are we doing for time? Can we talk a bit more, or do you want to start some Q&A?
I think that we have 10 minutes. Actually, I don't know if someone has some doubt at this time.
I'm sorry, I'm not sure what you refer.
No, actually, we can take the 10 minutes more if you want, and then we can go ahead to
Excellent.
the Q&A
Okay, perfect.
session. Yeah.
So thank you. I wanted to actually bring you shed some light in the opportunity in this space. And why do we want to actually refer to this? Because a lot of people had been wondering what is the opportunity and the upside to invest in technologies like ours and projects in blockchain. So the recent public listing or direct listing, because there's a huge difference, that happened with Coinbase opened the eyes to people to the opportunity. So as you know, Coinbase is one of the largest players in the US. They recently listed. They reached a capitalization of basically $86 billion. So how did they get there? Well, we can see the margins and you can see the revenues. What is interesting, however, is that the net margins have stayed the same. And secondly, is that they do not have all the licensing required. Now, we're not trying to bash Coinbase. We are big fans and we do business with them. However, when you look at the opportunity of a RegTech in Canada, which we're going to show you here, you can see the difference. So Galaxy Digital, which is basically managed from New York by a former Goldman Sachs, Mr. Mike Novogratz, exemplifies the opportunity of a regulated technology rather than just a fintech. So Galaxy has assets under management of $1.2 billion. They basically generated 260 million in cash and Galaxy stock, and they bought BitGo. BitGo in the US is the largest institutional digital custody holder, which has $40 billion. And a lot of people have basically wondered, how is it that they bought these? And the reason is, in many cases, because Galaxy has the ability to continue operations while BitGo doesn't necessarily have it in the US. And so when you see the potential and you say, well, that was 16 times earnings, but then you see that Galaxy was able to leverage that to the point where it's in the multiples of 40 to 60 times that they were able to leverage, then you can start to have an idea of the potential opportunity to participate in projects that have that specific component, which is regulatory certainty. Now, what is the potential for projects in this case for consolidation during the next phase? Dr. Hernandez and I have been looking at the multiples, and in the exits of most VC funds, the multiples run between 40 and 100 times earnings. So we think that there's a specific case for regulated technologies. Okay, this is the case in our technology, where we see the opportunity with very small transaction volumes to actually reach a unicorn status. Now, if you're interested to learn more about our technology, or you want to have a conversation with me, you can actually find us on LinkedIn. You can find our page at TridentX.exchange, and we look forward to your questions. Here is basically our regulator, the Alberta Securities Commission. The legal advisor is Fast and Martineau, and our auditors that are to be confirmed within the next few weeks, Myers Norris Penny. So now I will leave it up to you, and I'd like to, before doing that, thank you again for the opportunity. And I want to also mention that we are having the opportunity to present this to you due to the courtesy of the Coquitlam Public Library at the Poirier branch, where they were very kind to us, and they have been facilitating the happening of many of these events with EGADE and Tecnologico de Monterrey. So we're open for questions. Thank you.
Thank you very much, Eduardo. And let's continue with the Q&A. And you can open your micro or raise your hand, and we continue with the questions. So, Erika, please, your question.
Sorry, Professor. I doesn't have a question. I was just clapping with the reaction.
Don't worry, it's fine. So, Jose Manuel.
Jamie Dimon says Bitcoin is a fraud. Is he correct or not?
Well, I think that you should actually update your Bloomberg maybe, or look up what he said recently, because he did say that about 2 years ago, and he said that he would fire anyone that buys Bitcoin. But if you see his latest reports, he actually has backtracked on that. And not only that, but JP Morgan is one of the biggest players today in institutional trading. In fact, one of the technologies that we shared with you that is called Consensus Quorum was actually funded by JP Morgan.
Thank you.
You're welcome.
Anna, please.
Oh, sure. I was wondering, because in Mexico, well, due to legal provisions, you can't really well, financial institutions are not allowed to hold operations with the public with cryptocurrency. They can only use it for internal purposes. And I was wondering how that works in US or in your case in Canada, and whether you think if that might change with new countries recognizing crypto as legal currency, such as El Salvador.
Well, that's a good question. To be honest, regulators are having a bit of trouble to grasp the utility value of cryptocurrencies, and one of the reasons they're actually having these challenges, we think, because we have not asked them, right? We assume, is the fact that they do not understand that regulation, just like Mr. Gensler recently said, that the actual laws of the capital markets of the US do not even reflect what was happening 15 years ago. So let alone what's happening today. The problem is that a lot of the laws and regulations are a function of the limitations that we have the time that the legislation happened. So there is a reason why we have separation of assets, why we have intermediaries. Everything is basically very logical if you have a limitation and you're dealing with paper and you're dealing with physical certificates. The moment that you have cryptography and you can trust something through a cryptogram better than you can trust a piece of paper, the question is, would you rather have $100 bill, or would you want me to give you a copy of $100 bill? Which one would you take? The one that has the seal, or do you want to take the one that looks like it, but you don't know if it's real? And the answer is, you would want to have the one that you can verify. And the only way that you can verify today things is through cryptography, because you know that it's very hard or almost impossible to forge a document. And that is one of the things. Now, do we think that other countries will start allowing this to happen and will actually create a retail market? We think that is going to happen. However, the problem here too is that there is obviously a certain level of lobbying by the banking institutions, which have a de facto monopoly on the financial system. Now, that has created a certain level of resistance to the change. And what's happening in Salvador, it's a very fundamental piece of, I would say, propaganda, if you think. We have been following very closely. Cuba also came recently with that, Uruguay and other countries. But I don't think that is going to be a meaningful difference, because Salvador does not represent it's not a big player that will actually create anything other than a precedent. But again, Salvador is not Mexico. If you were to tell me that tomorrow Mexico became an adopter of that, well, Mexico represents the largest liquid monetary unit in the planet for the emerging market. So that will be fundamental. But El Salvador, unfortunately, still a very small player. Thank you, Ana.
Someone else? No, actually, Eduardo, I would like to ask you, for example, in the principle, and of course that the basic that the cryptocurrencies, the basic principle is to looking up to a decentralized economy, right? And for example, to like this movement started in the UK with the people that would like to be in a financial system, and of course to have different institutions as our regulators. How do you and how can we define the next strategies and of course the policies according to the anti-laundering, and of course how do you prevent that? But for example, if you included some regulators, we are the same, right? Because we are part of a financial system regulated with the regulators, right? So, parting on that way, how do you think that will be the next policies regarding to the anti-laundry and all the illicit activities into the blockchain and fintech ecosystem?
Well, you actually speak to a very interesting point because we had this conversation, in fact, today, and we have it very, very continuously. And we say, okay, you need to have an actual level playing field because, for instance, we are subject to a lot of regulatory oversight. But we're a Canadian entity. We're in Canada. We're taking crypto and fiat, and we have full whitelisting to KYC and AML. However, there is a lot of cryptocurrency exchanges operating everywhere that have been operating for 10 years and they didn't start like that. So the risk is already built into that side. And we understand that the opportunity is to have a level playing field. So the first thing that needs to do is there has to be an actual umbrella legislation that should actually have every exchange that wants to have liquidity with another exchange that is in a country like Mexico, Canada, or the US to fulfill their obligations on their end. Because if you're fulfilling it on your end, but the other side is not doing it, then that's where the actual systematic risk comes to that player. That's number one. Secondly, you need to create a standard that makes sense and also provide the opportunity for innovation on your countries with a very containerized model, such as the one that we're creating, where we know who are the players. And that is one of the fundamental challenges and really problems that there is. You have public infrastructure that in many senses opens the door to manipulation and secrecy and a lot of the bad things, but it also provides a certain element of democracy. And then you have a complete opposite, which is you can actually try to tighten everything, but then you can stronghold and you can actually sabotage innovation. So you need to actually strike a good, I would say, balance by allowing people to say, okay, like in our case, we're actually allowing people to come and bring crypto, as we said. So investors that have crypto will be able to come in our marketplace and buy cryptographic representations of a security or a bond, or a share of a bond or a bond. But when they come to our door, they will have to do the KYC and AML. And they will have to tell us, even if they had the crypto before, we'll have to say, is your crypto coming from a place that we know is whitelisted and they follow full, basically KYC and AML? Or are you just having it from somewhere else? Where do you get this crypto, right? Because that is the real question. It's not whether crypto is bad or good or bad. Everything can be used, for illicit goods. And in fact, if you think about it, the preferred method of money laundering is still cash, because cash can be traced. So that's where the opportunity lies, is to have a real balanced approach, but there is no magic formula, and we wish that we know the solution to that.
No, completely interesting that, and of course I think that will be the next discussion, right, as regulators and all the countries around the world, and will be many of the challenge for these generations to implement the different rules and policies regarding to the new financial ecosystem and asset classes that they are there, right? So finally, I don't know if many of us there's any confusion or other comment, a question, whatever. This opportunity that we have, Eduardo. If not, well, I will really appreciate. Thank you so much, Eduardo, and all the support, and of course sharing your knowledge in a practical way to the Tecnologico Monterrey community. And on behalf of the tech, let me share you this award recognition for the presentation that you have already talked with us, right? So thank you so much, Eduardo. I really appreciate all your time, all your effort, and all the knowledge that, of course, we can have this practical and, of course, the industry perspective, right? So thank you so much, and I really appreciate all the knowledge that we have already learned into this classroom today.
Well, thank you very much, David, and thank you everyone else for being part of this presentation. We hope that it was illustrative, that it will actually open your eyes to opportunities. And as we say, we are presenting a number of events eventually over the next few weeks. We're still collaborating with EGADE, and we'll look forward to the opportunity to collaborate with you and the rest of the academic team at Tecnologico de Monterrey. If you have any other questions or comments, feel free to reach out to me. And God bless, stay safe, and we'll see you soon.
Thank you so much, Eduardo.
Thank you. Bye-bye.
Bye-bye. Thank you.